Good afternoon. In this video, we're going to go over this past week's trades and the weekly recap. Before I get into the recap, if you're not in the room, you can find a link in the description of the video and in my bio section of the social media accounts. Also, please like the video and subscribe to the channel if you haven't done so already. Now, as far as the weekly stats this past week, I did 22 wins, 4 losses for a win rate of 84.62%. It's not too bad. I mean, I'd prefer over 85, but it's over 80, so I'm not going to complain. But I did finish the month of August with 121 wins and 15 losses for a win rate of 88.97%, so definitely over 85% for the month. Having a very strong year. Hopefully I can finish the year out strong. I'd like to finish the year over 85%. Right now I think I am, but still got what, 4 months, April, yeah, 4 months left of the year. So what did I say, April? I meant September. So yeah, I got 4 months left. Hopefully I can finish with 85% or higher for the year. So with that said, let's look at the trades for Monday. Didn't really trade that much this week. This week was kind of very choppy, a lot of fake outs, a lot of morning chop, especially in the first 30 minutes. It's just been very, very choppy. Market's been kind of playing games with both sides, tricking and trapping people. So, and plus with a high put to call ratio, I kept looking more on the long side and kind of got my one-sided blinders on. So other than that, I can't really complain. So Monday, let's see, trade ideas room. I'm kind of a little disorganized, so bear with me. Let's see, SPY puts at a 401, Amazon calls with a 313, 313. So I was looking at let me back this out. Puts on at open right down here. You can see 401 is right here, pre-market low. First 10-minute candle right here. And usually what I've been doing is I've been playing the first 10-minute candle, let it form. And once it's formed, you know, usually I will try to take the breakout for calls or the breakdown for puts. And usually you can get a good move in. But lately, you've just been getting this chop back and forth. I'll blow it up. You can see Friday we had a massive down day. Gap down a little bit. Started to fill the gap right here, pre-market or overnight during the futures. Then dropped down, started to come back up, and then it just chopped. But that's why I got the 401 level right there. And I didn't break it, so I let the first 10-minute candle form. I'll blow it up so you can see. Here's the first 10-minute candle formed. I grabbed calls over high a day. I grabbed the SPX 40/60 calls at $7.70, and they went from $7.70 to $8.90. So a small little play, $1.20. Especially the way the market's been. If you're up 50 cents to $1, you gotta take it. I mean, because you don't know what the market's gonna do. I mean, the market could just go against you really fast. I mean, look what it's done on Monday. It popped, dropped, then it popped and it dropped again. I mean, this is how it's been all week long for SPY. It just cannot make up its mind what it wants to do. So it is what it is. Then I took puts again at, no, not puts, calls again, the 40/60 calls at 10.12, which is probably right here. Yep, right here. Got the wicks right here. So when it broke over this area, right around the 403.50 area, that's where I grabbed the calls. The 40/60 calls at 640, and they went from 640 to 920 on that pop. Then it quickly got rejected. Then I switched to puts right at 1036, which is right here. I could have bought it right there, but I think I waited down here around the 402.70 area because you see the bottom of these candles, the bodies, not the wicks, but the bodies right here. When it broke below that, that's where I ended up taking the 4,000 puts at $6.30. and they went from 630 to 850 in that dump right there. Then I switched to calls at 1122, which is right here. As you can see, it dumped. It made a red candle right here, making new lows. It broke lower day, but it didn't break pre-market low. It stayed above it, which was a good sign of bounce. Came back up to the 20 EMA, made their nice green candle right here, another inside candle. But when it broke over this area right here, 402.25, that's where I ended up taking the calls, the 440 calls at 790. And they went from 790 to 1240 on that push up to higher day. Then I took calls at 1248, which is right here. I took this because breaking higher day. Yeah, so when it came to higher day right here, it pulled back down to the 20 EMA, which is this blue line. Then it quickly shot back up to higher day. Usually when the market rejects higher day and it comes back to it quickly, it's a high probability that it's gonna break, and it did. So I had the 40-55 calls at 660, and they went from 660 to 1150 on that push right there. Then I took calls again at 313, which is right 313 right here. I took the 40-55 calls at 610. So I took it right here. So it must have popped up a little bit. You see the opening, then it popped and it dropped. So it doesn't look like I got much of a move. They got it at 610 and they went to 750. Yeah, so basically when it opened, when it broke over this 4, 5, 10 area, it popped up just a little bit. And like I said, when you're up over $1, I mean, you got to take it. It only went to $1.40 on that run. So you got to take the money and get out, because if you didn't, you just got wrecked on that. End of the day plays are very, very risky. I see all the time people get into these end of the day plays, holding and hoping, waiting for a huge home run. Then it goes to zero and they end up taking a loss, and they didn't want to take a loss. If you don't want to take the risk, then don't take the play. I see it all the time. People complain about the end of the day plays. If you don't want to take the play, you don't like the risk, don't take the play. Plain and simple. I don't mind the risk. I don't mind the craziness. So I'm so used to it. It doesn't even bother me. It doesn't even affect me whatsoever. So the correct way to play it is, if you are up, you need to use the cushion you have to play the end of the day calls. Otherwise, you just you're risking too much. You don't want to do that. So with that said, Tuesday, let's see, SPY puts under 403, Amazon calls for 132. Let's see, I took what did I come up with? A 403. Can we blow it out just a little bit? How did I get 403? 403 is right here. I didn't really kind of like grabbing this level, because it shot up to 406.50 plus, then it just sold off, and I felt like as it was selling off, that if it got below 403, yeah, maybe it would tank it, but I also felt like that it already dropped so much, so it could be a huge fake out. So I wasn't quite really sure. I may let the first 10-minute candle form. Once it formed, I took the new lower day. I took the 40-10 puts at 580, and it did work out. So they went from 580 to 920 in that little dump right there. Then it shot back up at 956. This is where I reloaded. Actually, I took it right here, but it popped back up. But when it came back down here, I did reload, but I got the 4,000 puts. I got a closer, cheaper strike. Got the 4,000 puts at 680, and they went from 680 to 1340, which was a huge move. So that was almost 100% play right there. Then I ended up taking puts at 1150, which is right 1150, I think it's right here. Yeah, right in here. As you can see, we had these nasty candles that pop back up. The rate when it came back down, actually it popped back up. They had this red candle. When it came back down and broke below this area of 398.25-ish, that's where I grabbed 39.70 puts at 720. Then it bounced up to VWAP and I added more at 1233, which is right down here. I mean, I could have added that VWAP, but I wasn't sure if it was just going to take off. But when it rejected and came back down below this 398.25 level again, I added more at 520, making my average 580. And they went from 580 to 760 on that dump right there. So that worked out pretty good. Then I took calls end of day at 341, which is right here. $341. I'm not quite sure how this turned into a loss. I think, yeah, candle opened up here, so I probably got it closer up to VWAP. That would make sense why I would buy it right there, because it dropped, opened up, and it quickly, actually I do kind of remember this now, because it was making quick drop to pop, and I was afraid that it was going to break VWAP, so I got it a little bit prematurely. The 39.90 calls at 550, and it just didn't work out. It went against me almost immediately. I think it went against me immediately. So another end of the day, yeah, end of the day's plays are very, very risky. Like I said earlier and keep saying over and over, if you're losing end of the day plays, stop playing them. Plain and simple. I don't want to hear any excuses. If you need to track your trades, what you're doing, and figure out where you're struggling, what you're doing wrong, and fix it, because that's the only way you're going to improve. That's the definition of insanity. If you keep doing the same thing over and over and over, expecting a different result, it's not gonna change. You need to figure out what you're doing wrong and change it. So I don't mind the end of the day plays. I mean, I actually like it. I think they're kind of exciting. It's a thrill more than anything. So especially if you're on the right side of it, but it is what it is. So if you don't like it, end of the day plays, just don't play them. And I've noticed that lately the first 30 minutes and the last 30 minutes have been the most riskiest plays, and usually those are the most profitable and the best moves. But lately, the last couple of weeks, they have been the worst times to trade. So you just gotta recognize these issues and adapt to the changes. So the best plays have been happening like mid-morning, so late afternoon. So yeah, I took a loss on the end of the day play on that. Then on Wednesday, it's the 31st. Trade ideas room, SPY calls over 40150. Tesla puts under 277.50. I think Tesla actually broke down, so I missed that. But let's see. Calls over 40150. Where did I get that level? 40150, which is pre-market high. Well, yeah, pre-market high is 40127, but I round up for the 50 cent or whole dollar. Makes it easy to remember. So didn't break out, dropped pre-market right before the bell, and when the bell opened, it dumped, and then it made the first 10-minute red candle. But when it broke over higher day, the ORB, which is open range breakout, I took for the 40-30 calls at $6, and they went from $6 to $9.80. So that was a nice little play. These ORB moves are usually been really, really good and easy to play, but some days it just hasn't this week. But this particular day, on Wednesday, it was a good play. Then I switched to puts at 10 o'clock, which was right here when it came back down. So yeah, it dropped, popped, rejected pre-market high, quickly got crapped on, and when it got below the 399 level, that's where I grabbed the 39.75 puts at $8, and they went from $8 to $11.40. Then I switched to calls at 10:45, which is right here. It dropped. It stayed underneath pre-market lows. I mean, it didn't break pre-market lows. It popped. and that's where I grabbed 40, 15 calls at 720. I didn't play that much. I mean, play that with size. Been playing kind of small all week long. So when it popped up, it got rejected, like at VWAP. Then it dropped, and at 11:56, right over here, yeah, I added more, thinking we were gonna break out, because I got it here, dropped, waited for it to come back up. I didn't have many cons at that point in time, and if it came back up to my level I was going to add, which I did. I added more at 350, making my average of 460. Don't remember. I think this is one I sold some and I only had a few left over. Yeah, I think I sold some at like $8 and held some for a bigger move, and the few ended up going against me. So when I got back up here, I ended up averaging down. I think if I remember correctly, I think I had 3 left and I added 7 more. So my new average was 460. Then it just dumped. So I ended up stopping out at like 210. Yeah, I stopped out at 210. Then I switched to puts at 119, which is right here. Rejected VWAP harshly and came back down to this area 497.50. This is where I switched to puts. I grabbed the 39.70 puts at $6, and it went from 6 to 10. Then I grabbed calls at 344, which is right here. Must have been right when I got over this 397.40 area, because you can see nice strong green candles, pull back. I didn't quite want to buy it in case it dropped more. I waited for it to get over this 397.40 area, and that's where I ended up grabbing the 39.80 calls at $3, and it went from $3 to $4.90. So $1.90 move, you got to take that, especially at the end of the day. See too many people trying to nail home runs. You're not going to nail a home run. The chance of you nailing a home run is going to be extremely slim. It's better to focus on base hits than it is anything. And if you want to leave 1 or 2 for a bigger or larger move, then that's up to you. Just do it at your own risk, of course. And so yeah, that end of the day play ended up working out well, and those calls at $3 were very cheap. So it was definitely worth the risk at $3 versus like $7. So on the 1st of September, SPY calls over 394, Tesla calls over 274. What? SPY calls over 394, Tesla calls over 274. Okay, that just throwing me off the numbers. So September 1st, all right, I say puts another 4 calls over 401.50. What? 394, which is right here, this high right here. I call them out right around 920, which is right here. And you use pre-market high 394. And first candle was red. Then I waited for the ORB and it popped up. I remember this because this is where it was tricking and trapping people. So as soon as it broke over higher day, I grabbed the 39.60 calls at 740, and then it just dumped, and then I ended up stopping out. So then I ended up grabbing calls again at 1028, which is right here, this candle. Yeah, I remember this. This was very, very frustrating. I didn't take the puts right here. I think I was waiting for news. I don't remember. I think news came out at 10 o'clock. I don't really remember. But yeah, I mean, look at the inside candles. I mean, they were faking the breakout, then they were faking the breakdown, then it actually did break down, then it quickly got bought back up, and this is where it dropped, and it came quickly back up to the 392, 393 area. That's where I ended up grabbing 39.50 calls at 610. Then it dropped and it came back up. I bought more at 11.35, which was right here. I think I bought right over this area right here, the 391 over VWAP. I think this is where I ended up adding, because I bought initially at 610, then I added more at 3, making my average at 380, and they went from 380 to 430. I was able to get out green. So not quite sure. I think I might have sold most of this one too, and I just ended up averaging down because I haven't been playing that heavy the last couple weeks. I mean, usually I'll play 20 to 50, and sometimes if I'm really crazy, I'll want to take some risk. I'll play more than 50 to close to 100 sometimes, but lately I've been playing anywhere from 5 to 20. I mean, I've cut my size down in half just because of the way the market's been the last couple weeks, choppy and trappy, and staying in a tight range. You just don't know what's going to happen. So everything's kind of a mess right now. So that's why I've been trading a lot less in size. I mean, I don't really need to trade with insane size anyway, so I'm not a greedy person. I live well below my means, so I don't really need to make that much to survive easily. So that's why I cut back the last couple weeks just to because of the market conditions. I just didn't. It's not very favorable right now. So then I took puts at 11:45, which is right here. Pop back up, got rejected right when it came back below the 391 area. That's where I grabbed the 3,900 puts at $7, and they went $7 to $7.50. Nothing really much there. Then I switched to calls at 215. Right here, I definitely liked it better. I didn't take it right there. I should have taken it right here because it's rejecting, bouncing up, rejecting, bouncing up, rejecting. When it came back up, the more it rejects an area, the higher probability it's going to pop. I probably didn't think it was ready to take right here, so I ignored that. But when it popped up and came back down, and tested the 20 EMA and VWAP, and it came back up to the 393 level. I did take this. I did take this with a size because of it did this. I took the 39.35 calls right before the breakout. I like to buy right before the breakout because what happens is when you buy at the breakout or after you're chasing this massive candle, that is why I always buy 10-15 cents before the breakout. I know it can be premature, but 90% of the time if you buy right before the breakout, it's going to be such a strong move. It's worth it. And to me, that's what I like to do. If you don't like doing that, that's up to you. But this is me. This is the way I trade. The whole purpose of the room is to share what I'm doing. None of it's financial advice. None of it's telling you to buy or sell. You have to do everything at your own risk. This is just what I'm doing and how I think and what I look at and stuff like that. And to me, every time it used to break out, I always felt like you were chasing $2 or $3 after the fact. So I always got into the mindset where if it looks like it's getting ready to break out, I will buy it right before the breakout at 10, 15, 20 cents before it looks like it's going to break out. I will get it prematurely. Then usually when it does break out, you have a strong move. So that's why you end up seeing these massive moves. I bought these calls at $6.50 and they went from $6.50 to $20 plus. So those are the kind of moves, like if you waited for the breakout, you wouldn't have got it at $6.50. You would have probably bought it at $9. And if you bought it before, you could have got $6.50 or even lower and made 50-75% on that play just on the breakout. But yeah, if you chased it, you would have paid probably $9, $8, maybe even $10 by the time that happened, because IV just skyrocketed on that breakout. So yeah, that was a very good play right there. Then I took puts at 236, which is right 236 right here. Okay, you see it rejected pre-market high. Gonna make sure my mic's working. Yeah, pre-market high right here. When it rejected that, it came back down. I grabbed 39.50 puts right here at 236, which is this candle right here. 200 EMA is the purple line where it rejected also. So the 39.50 puts I bought at $8, and they went from $8 to $12.20. So that was a nice little play. Not quite near the end of the day, but 236. I didn't touch anything end of the day. I probably should have. I think I stayed away from it because I just wasn't sure. Or maybe I just decided to call it a day. I don't know. But I didn't take the end of the day play on push on that one. So it is what it is. So The second, which is what, Friday, Roku puts under 68. Now the reason I just couldn't really pick a level because it popped up, and right before the bell, it was already up to about 399, 400, and the pre-market lows were down here at 396. To me, I couldn't really call any levels. It just didn't really seem like it would, and I know there was resistance right here on the hourly at 401, right there. So I mean, I wasn't quite sure, and I definitely didn't want to make a call for puts at 396. I mean, it's up to $400 plus, so that's a $4 plus move. And if SPY dropped $4, it didn't even drop $4, it was likely going to bounce. So got to pay attention to that. But I took SPY calls, SPX calls at 1012, which is right here. I think I grabbed it 1012. I think I grabbed it right here, right over this area. I think 399 is when I got over the 399 area. I grabbed the 4010 calls at 760, and they went from 760 to 1860, and that push up. Then I do remember this. I had calls at 1104, which was right here. Now it had this strong move, it pulled back, then it started to make this green candle. It looked like it was going right back to higher day really quickly. It didn't pull back a little bit, but I stayed in it and I made a nice ascending triangle right here. And usually when you have these ascending triangles, they end up breaking out, and it kept trying to break out over the 401.30 area. I just couldn't. Every time I did, it got shut down, but it was making higher lows in the process. So I thought for sure it was going to break out, but it didn't. It just ended up falling apart right when it did dump. I didn't even notice this. I didn't even notice that there was a hidden divergence going on. As you can see, that this high is making a higher high right here, and the histogram is making a higher low. So there was a hidden divergence going on right there. That was the telltale. I didn't even notice it. That was a huge mistake on my part. I probably should have waited, but all I saw was the ascended triangle, the high put to call ratio, and that we were going to push, and the market just dumped. So, and by the time it dumped, I missed it here. Then I think there was news, and by the time I really thought about doing anything, I wasn't going to grab puts right here. It was already down quite a bit already. I didn't want to chase it, so I just waited. I waited and grabbed calls at PDC. I got to look at the option room because they blended together at 1241, which is right here at the PDC level, previous day's close, which is a white line. I grabbed the 39.90 calls at 660, and they went from 660 to 760, and I got a dollar move out of that. Then I ended up taking them again, and they went from $6 to $7.30. Let's see, what was the timestamp on that? It's literally 3 minutes later. It's 12:45, so I can take it down to the 1 minute chart, and you can see exactly. See right here, 12:41. Yeah, this is where I grabbed it, and it bounced up a little bit. And it dropped more right here, and this is where I grabbed it the second time, and it got that little bit of a bounce, and it flushed straight through. I didn't grab it another time because I just didn't really feel comfortable grabbing it right there. Good thing I didn't, because it flushed more. But I did grab it at 102, which is right here, right at the 395 area. Now I grabbed it there because of grab VIX. I think VIX, I was looking at VIX. Let's see. Let's bring VIX to the 10 minute. Yeah, see right here, VIX PDC, 200 EMA right there. As soon as VIX hit this area, that's where I ended up grabbing the 39.75 calls at 620. And this is where I had a nice little bounce. And they went from 620 to 790. It seemed like the bounce should have been more than that, but for some reason it wasn't. Maybe I got in on just a tad bit late. I don't know. I think I got it right close to the very, very bottom. But anyways, 39.75 calls went from 620 to 790. Then I bought puts this time at. To me, I didn't want to buy puts on this way down. I mean, it's already down so much, and I don't really want to keep buying puts, especially when it's gone straight down. Because you're going to have relief bounces like you had at PDC. I mean, market's going to react to certain areas like the PDC, the RCT, and it's going to, VIX is going to react to, so if VIX is going to react to certain areas, you're going to be sure that VIX is, SPY is going to react to it too, because SPY does react to VIX stuff too, so you got to kind of pay attention to VIX. So that was the whole purpose of the 39.75 calls at 102 was primarily the VIX rejecting PDC, so which was right here. Then it shot down more. Then it actually started to consolidate, make a bear flag. I actually thought about calls right here. I almost took it right here. I was thinking it. I had it pulled up, and I was just about ready to enter. And I was like, no. My guts just tell me just to wait. I'm glad I did because it dropped. And now I don't mind buying puts down here because it's consolidated, had made a nice little bear flag, and then when it got below the 392.50 area, that's where I grabbed the 39.25 puts at $6, and they went from $6 to 17.80 in that dump right there. I have no problem buying puts after it's dropped this much when it does something like this. I don't like buying puts when it's doing this because we've seen SPY too many times have a nasty drop and have a nasty V rally. But when it's actually dropped this much and just consolidated like this, made a bear flag, I don't really mind buying puts onto this. So I was really thinking about calls right here because I kept thinking the put to call ratio is going to be even higher, and we were going to get an end of the day bounce. I'm just glad I didn't take that because that would have ended up being another loss. So, but yeah, I stuck to this side and worked out well. So yeah, the only thing I really regretted, I missed this drop. I missed the hidden bearish divergence. I should have saw that a mile away. I usually look at that, but I had, like I said, I had my put to call ratio short squeeze blinders on, and I wasn't even looking at that. I was more focused on the ascending triangle breaking out. Then it flushed, and I was like, okay, that was a stupid move, but whatever. It's part of trading. You're never going to get all the trades right. All patterns are not guarantees. Just because you see an ascending triangle, you see a head and shoulders or a cup and handle, doesn't mean it's going to pan out. I mean, they do fail. And this ascending triangle near a higher day, which usually ends up playing out, did fail, and it's just part of trading. There is no sure thing in trading. You got to understand that. There's no sure indicator. There's no sure pattern. There's nothing's ever absolute in trading. That's just how trading is. So with that said, hope you enjoyed the video and this has helped you, and thanks for watching.